Hello and welcome to another Smaulgld live stream. It is Tuesday the 16th of April 2019. And tonight's topic is Japanese e-commerce giant Rakuten will be soon selling Bitcoin. Now this is a story what we talked about 6 months or maybe even a year ago about this company. It is the largest e-commerce platform in Japan, and it also has a crypto trading platform, and it also owns a bank. So we were talking about the confluence and the importance of marrying all three: a bank, crypto trading, and e-commerce. Remember, Amazon has not it has the largest e-commerce in the world, but it has no crypto trading and it has no bank. This is a very big development, which we'll get on to later on in the program. Also, we're going to be talking about the Fed. Recent pronouncements on interest rates, pretty much a 180. We're talking about what Trump's talking about with the Fed, his recent nominations to the Fed board, Herman Cain and Stephen Moore, and what that might mean, and some of the things, the pressures he's bringing to bear on the Fed to actually lower interest rates. And then we also have a fund manager from Blackstone talking about a potential melt up in the stock market. So we're going to talk about the stock market. We also got a good story from China. Some drama in a Bitcoin fork, a delisting of Bitcoin BS. We've got, sorry, not BS, SV. Could be BS, a Venezuelan gold story. So let's get into those stories. Welcome, Smaulgld, mug stackers, and game changers. Let's start off and take a look at what's happened in the markets. As I mentioned, the markets have been very resilient since that December 24th Christmas Eve meeting when they convened the President's Working Group on Financial Matters, the so-called plunge protection team. The stock market looked like it was into a bit of a free fall of a decline, but the market has rallied since then and is well above, the Dow Jones is above 26,452. That's up 67 points. Not a big gain today, but still 0.25% higher. NASDAQ poked its head above 8,000, up 0.30%. That was up 24 points. And the S&P 500 over 2,900 at 2,907, up 1.48. Let's take a look now at our gold and silver prices. Then we're going to get into the crypto prices as well. Okay. So today was a day down for gold and flat for silver. You don't see that very often, but it did happen today, and that did drive the gold-silver ratio down just a little bit. And I don't think I did the chart. Let me see. Did I do the charts tonight? I'm not sure if I have them. We got plenty of gold and silver stories. Don't have the charts. But we do have a couple of gold and silver stories as well. We mentioned Venezuela. Venezuela de-goldizes, if that's a word. You hear about de-dollarization. Well, Venezuela's going to sell about $400 million in gold amid sanctions, sources say. So this shows why gold is good to have. Gold is good to have in an emergency. And guess who's having an emergency? Venezuela. There comes a point where they have to sell, and it is something of value that they have. They certainly can't print Venezuelan bolivars and expect people to take those. So they're at the point now where they are selling off whatever gold they can get their hands on. They still have gold at the Bank of England, and England is holding that back in them because of sanctions. But you've heard stories how Venezuela has shipped some of its gold to Turkey for holding. Not sure where this 400 million worth of gold is coming from, but I guess Maduro figures it was good to have. Now you also have to beware that you often see in these types of countries, the president ends up walking away with the country's gold. Little known fact, but earlier this week we had I suppose it's the 120th anniversary of the Gold Standard Act. And this is important. Those of you who have followed the history of silver in the playlist on the Smaulgld YouTube channel, we talked about how in the late 19th century there was a movement to try to keep silver in the U.S. monetary system. The Silver Democrats lost that battle despite the orations of William Bryan Jennings in his quest to become president, the Democratic nominee, silver was demonetized officially again. They'd gone through a series of, I guess, removing silver from the free silver concept, where you could no longer bring, this happened in the mid-19th century, bring freshly minted silver and have it stamped into a coin with a dollar on it, even though you were bringing them maybe 30 cents, 40 cents worth of silver. But in 1900, that's when the Gold Standard Act fixed the value of the dollar against gold, and the U.S. was finished with the bimetallism standard. And that's why this nonsense talk about the gold-silver ratio going to 16-1 or 15-1, it's, quote, historic ratio. That was a historic ratio when the U.S. fixed the gold-silver ratio as part of including silver as an accommodation to the Democrats, because it was inflationary, as part of the monetary system. Silver became not part of the monetary system, or at least part of the standard of which the dollar was measured. We still had silver in the U.S. system in that it circulated as coins, and they made those coins up until 1964, and they finally took the silver certificates out of the financial system in 1968. And that's why, since 1900, you've had nothing approaching a 16-1 gold-silver ratio. You did have it for about 10 minutes in 1980, and that's about it. And that's why the gold-silver ratio is maybe not as high as it is right now, but is why it has not been for 120 years anywhere near that, quote, historic ratio. What else happened in the gold and silver? Let's see. Well, we got a couple of pumper stores. Which one should we start with? We got the silver shortage one in a couple of places. Silver shortage. Production plunges for the world's largest silver miner in Q1. So they went from, I don't know, 18 million ounces in one quarter down to 16 million ounces. So silver mines in general and the secondary mines that produce silver produce about 880 million ounces, 850 million ounces a year. You're talking about a loss of 2 million ounces in a quarter. So this particular mine, I think it's Fresnillo, let's say it continues at this rate and it's 2 million lost each quarter and they lose 8. Let's say that gets worse, they lose 10. This is not a game changer silver shortage, but that doesn't stop anyone, because then we see Egon von Greyert saying, silver shortages are here and gold scarcity is coming. Sure it is. Silver shortage followed by COMEX default and a gold-backed yuan and Basel III gold buying. And what about JP Morgan has buying gold, buying silver? It's silver. JP Morgan has millions of ounces of silver. All of these stories are ridiculous, but they never stop. They're evergreen. COMEX default, silver shortage, JP Morgan has silver, and you can't prove that they do not have silver. Okay, I can't prove they don't have it. And you can't prove that China's not going to have a gold-backed yuan, and never ends. Well, then there was another one here. Our friend Mike Baloney, what does he have to say? Oh, this is the dollar collapse story. I am concerned and amazed for the U.S. dollar reserve status. Yes, Mike is concerned. So, I guess because silver sales are down, it's time to trot out the dollar collapse. U.S. dollar's going to... What about the pen of the petrodollar? That's another one we got to hear about if this one doesn't work. Or J.P. Morgan buying silver. Who knows? What else do we have in... Well, that's enough for gold and silver. Let us move on. Notre Dame. We were supposed to open the show with Notre Dame, and we got a little technical difficulties. Well, there she is. Our Lady in Paris took fire. Coughing from the fumes. Took to fire on earlier in the week and almost burned down, but it didn't. It looks like they're going to be able to save it. I'm sure there are some damaged things that will be irretrievable. The oak roof is gone. That spire that you see there in the middle is gone. But the good news is that it is apparently all salvageable. And this guy right here, I think his name is François-Henri Pinault. He and his father are pledging, I believe, it's 100 million euros. These guys are these monsieur, they have, I think they own Gucci. And then also, Bernard Arnault, he owns Louis Vuitton and Hennessy Cognac and a bunch of other luxury brands. And he's decided he's going to donate 200 million, actually euros. So it's well over 300 million euros that are going to be donated by these two gentlemen. But we got a moron here.
Presenting the distinguished international news commentator and foreign correspondent, Smaulgld.
This has been an extraordinary week in world affairs.
No, I told Hillary Clinton that that's moronic.
Yeah, but then you get people like this. French tycoons have already pledged $340 million to rebuild Notre Dame, a great show of generosity. And that's where he probably should have ended his tweet, but he says, and perhaps also a sign that inequality protesters have a point. No, they don't have a point. These guys are going to donate $350 million. We could leave it at that. Let's talk about China. Electronic vehicles. Now, China would love to do some more electronic vehicles, I suppose. I don't know why. I mean, they probably have some interest in cobalt mines. Would help, but looks like maybe they're building too many of them, just like with everything else. And the story here, warning signs emerge that China's ballooning electronic vehicle market could burst, just like the rest of the economy. And why do I say that? Well, Chinese debt. No worries. This is from the Chinese Beige Book. There are no official data on the off-the-books debt, but authorities estimate the unofficial liabilities could be 2.5 times the on-the-book borrowings, which of course are already outrageous, and many of them are non-performing loans, depending on the industry, which was 18.4 trillion yuan last year. Overall, total debt of local governments would amount to 70% of China's GDP in 2018. That's just the debt of the local governments. Toss in all the other manner of debt that they have, and you're at about 300% of China's GDP, debt to GDP. But China to crush the dollar, and the gold-backed yuan stories persist. Now, let's move over to cryptocurrencies. A lot to talk about here. First, let's look at the prices of what's going on in the cryptocurrencies. Bitcoin, let's look at a 2-week chart here. It's up today a bit. You can see all the way to the far left it had that big surge. When it got above 5,000, it had been in the 4,000s. It shot up and then it crept even higher. And 2 days ago, I think it took a bit of a plunge. But look, it looks like it's heading higher once again. It's not quite at the highs of a couple of days ago, but it's at about 52.30 at the moment. Ethereum, similar, not quite as good. Also making a bit of a move higher today, but still down. So Ethereum at 100 and I think it's like at 167 on coin market cap. That's what I have it here on this chart I pulled just before we got on the show. Litecoin also. Now Litecoin had made a really big rise from the 60s all the way up to about 100, and then it trotted back down into the mid 70s. And right now it's at about 81 and a quarter, 81.40. Actually, it's 81.40 on market cap and on my chart here as well. Let's just take a look at one other BAT, which is it's more of a advertising browser token. That has made a big drop during the middle of the week, but right now it's at about 32.5, and I think that's where it is on coin market cap. Yep, 32.6 cents. Now we're going to take a look at the story that is the drama story, Bitcoin SV. Let's take a look at that chart right now. We're going to revisit that story, but let's take a look at what's happened there. Now you saw those other charts. Generally you had a big rise up and then we've stabilized, move down, move up. But this coin right here, this is a fork of Bitcoin. After it forked, you had Bitcoin Cash with Roger Ver and this guy, I can't remember his name anymore, but he's the guy that's created all the turmoil. They call him fake Satoshi, and he's suing people for saying that he's not the fake Satoshi. He's suing people for calling him a fraud and so on. Anyway, he and his group split from the Roger Ver group, the Bitcoin Cash people, and they did another fork. And both coins were doing pretty well. And you can see now this coin, what's going on. Now this one did not get the big, it got the boost, you can see to the far left of the chart, from about 72 to 90. But then ever since, it's been on a decline, and you can see a big decline the last day from about 72 down to about 54. And that's part and parcel of the drama that's been going on with that coin, which we're going to get to in just a bit. But first, we got some more stories on the Bitcoin prices. Now, you're still getting a lot of these people coming out of the woodwork. Well, this one never left. This is John McAfee. He hasn't shied away from his, I don't want to say absurd or ridiculous, but his far-fetched, I don't know, his extreme predictions that Bitcoin will be $1 million by the end of 2020, or he will eat a certain part of his anatomy. And he made that, I guess that was 2 years ago, maybe. Well, he's still saying, come on, people, time to brush up on your math skills and run some numbers. It's mathematically impossible for Bitcoin to be less than $1 million by the end of 2020. So he is insistent that that's going to happen. And then we have these other guys out there, like this one, BitMEX CEO, 50,000. That's no problem. Just where they get these numbers from, it's going to be 50,000, $1 million. Here's a guy, $1 million. This is a PayPal executive, and he's saying, but he's saying 1 million likely, not gonna happen, guaranteed, not impossible for it not to happen, but he's saying 1 million likely in 7 years. So you have these predictions coming out. Here he is, $1 million. I wish I maybe can get his name here. What's his name here? Nope, don't have his name. But PayPal director there as well. One Bitcoin could exceed $1 million. This one it says $1 million in 7 to 10 years. Okay. And one of the things I do want to mention is the 1% rule. We're going to talk about some 2020 campaign developments, but this is my 1% rule. This is an investment advice. This is actually just math. If you have a speculative asset and you're interested in it, and you say to yourself, I you know, maybe it'll go up, but it could go to zero. Okay. Well, by its definition, that's speculative. The risk reward is there. You could see that it might double, triple, go up 1,000%. I mean, everybody wants to be in on the ground floor of Microsoft or Bitcoin, whatever it is at the time, but you're reluctant because, obviously, if it already was Microsoft, then it wouldn't be a penny stock. It would already be worth $40 billion, and you couldn't buy it for 22 cents. But here's one way of looking at it. That if you look into speculation, if you put 1% into something, let's say you have $1,000, right? So if you had $100, it would be $1. If you had $1,000, it would be $10, 1%, right? The 1%. So if you put 1% of your $1,000 portfolio into something speculative, it's $10. Okay, if you lose your $10, you lose your $10. Chances are, if you had $1,000 and you had other investments like a bond or a couple of stocks, chances are you might still have a positive return of a couple of percent in a decent market, even though you might have lost $10. Now, if that $10, however, rises tenfold, your $10 now becomes $100, which means on your $1,000 investment, you've made $100, which is 10% gain on the entire portfolio, right? $100 out of $1,000. But if that 1% investment of $10 rises on the outside chance, it goes up 100-fold, that $10 can be $1,000, which would mean that would be a doubling of your portfolio, and the rest of the portfolio can go to zero, which it probably wouldn't. So that's the 1% rule. And I think that's a smart rule because you're not really going to lose anything, and you could win. What the problem that people have is they see 1% and they go, well, if it was 2%, then I would make 20% and I would triple my portfolio. And next thing you know, they put half their money or all of their money into speculation, and it doesn't go up tenfold, and it doesn't go up 100-fold. It goes to zero, and they lose everything. Anyway, that's the 1% rule. But one thing is for sure, if I thought something can go to $1 million, like on an outside flyer, it might make sense to have $10 worth of it. Okay, what else do we got? Again, that's not investment advice. That's just the 1% rule. Applies to all speculation, I suppose. And even if you did it every year, if you lost 1% a year, I would bet if every year you found a speculative stock that you're willing, or speculative anything, that you're willing to put 1% into, no matter what happened, I would imagine maybe one of them might actually give you a return, and maybe 9 of them might go to zero. Who knows? All right, some adoption stories. Let's talk about, there's a couple of them here, but then we're going to talk about Rakuten, the Japanese e-commerce giant. But there's a couple of others here. Avnet, one of the world's largest distributors of electronic components, leads industry by accepting cryptocurrencies using BitPay. So a lot of these companies are now realizing, and they've said that they've made a couple of multi-million-dollar sales using the cryptocurrencies. It really makes no sense for a company not to accept cryptocurrency via a payment processor. They don't take the risk at all. What happens is they set up something like BitPay or Coinbase on the front end, and they price their goods in the fiat currency, euro, yen, dollars, whatever it is, and the customer sends the equivalent amount of whatever it says on the screen, that they owe $289. They type in $289 for Bitcoin, Litecoin, whatever it is. The wallet converts the appropriate amount of Bitcoin or Litecoin, and you send it. The payment processor grabs that Bitcoin or Litecoin, converts it into the dollar amount, sends it along minus a fee to the merchant, and the merchant gets us $289. And the customer gets a receipt that their order has been accepted. Now that's a $289 transaction that might not have happened but for accepting cryptocurrency. So it's incremental revenue probably. But even if it wasn't, even if that person always used the Visa card, in this case, the merchant would have saved the Visa processing fee. But then you say, what happens to the payment processor? He's screwed, because what happens if the price of those few Litecoin or fractional Bitcoin that he converted at $289 goes down? Doesn't have to worry about that, because the way the processors work is they automatically have on the other end, like for example, in Binance or Coinbase, they have crypto exchanges where they already have buyers lined up to buy cryptocurrencies. So all they do is they then on-sell it onto their platform, and of course they charge a commission there as well. So if you properly run a payment processor, you're running on volume. You don't care whether the price goes up or down. You just need to make sure you have a liquid market on the exchange side, and if you do, you can run payments through there all day, every day, taking a fee on both ends. And here you see Binance enables debit and credit card payments. So you now have Binance involved with a company called Simplex. And this makes it easier for merchants to accept it. They don't have to worry about taking the risk. Also have CoinCheck. This is important here, that when you have these healthy over-the-counter markets, because Binance announced today, which is the world's largest cryptocurrency exchange, and only 7% of their customers are retail. Which means all this trading is happening at the retailer. We haven't yet seen the massive projected influx of institutional investors, which is what Fidelity is going after, which is what TD Ameritrade are going after with their upcoming release of RXX, which is Bakkt is going after with their proposed platform backed by Microsoft and Boston Consulting, Starbucks, and the New York Stock Exchange. But here's one. CoinCheck adds Ethereum and Ripple to its over-the-counter trading desk. A lot of trading does take place over the counter so the trades don't necessarily impact the retail price. Here's one, eToro crypto exchange. They launched, I think this is in Israel. They're launching a exchange. You're seeing a lot of these exchanges being launched. There is the volume. It seems to be coming back since the price has been coming back. And here's one, Superstore. Bitcoin Superstore latest services links Amazon, eBay, Alibaba, and 200,000 stores with Bitcoin, XRP, and so on. And it's another way, it's a little clunky, a way of people can use their cryptocurrencies through, again, it's not really a payments process. This is a Superstore, and then they place the order through those major sites. It's much easier, I believe, if Amazon, eBay, Alibaba, or any of these others would just set up themselves with a BitPay or Coinbase or any of the other payment processors rather than this solution. Also, the largest travel management firm in the UK announced, I think it was today, I think they set up corporate travel arrangements. They're now accepting Bitcoin for payment. And again, a lot of people say, well, how much actually goes through there? It doesn't really matter. It really doesn't cost anything to set up the acceptance of Bitcoin. And as I mentioned with that Avnet company, they already got a few million in large orders that way. People look at it as like a binary, all or nothing. Well, they're still accepting fiat. Yeah, of course. And they probably always will. See, a lot of the Bitcoiners, the fanatics, they keep saying it's going to replace the dollar. And then when it doesn't replace the dollar, the anti-Bitcoiners say, see, it's nothing. Well, it's somewhere in the middle. And actually, from 0% to 100%, there's a lot of money to be made if you get 5%, 10% of the payment market. And there's a lot of value that you'd have in Bitcoin. Bitcoin doesn't have to become the world's global reserve currency or everyone's... That's ridiculous to even think that. If it's possible, and I would think it'd be worth more than $1 million a coin. I don't think that's going to happen. I don't project that to happen. I don't care if that happens. And then there's people who think, well, if that doesn't happen, then it's worthless. It has no value whatsoever, and it's going to zero. Again, I think it's somewhere in the middle. I think you already seen it's already got a toehold in the payments market, and I think that's the best use case. Some people say store value, they want to store it. Okay. Let's talk about Rakuten, because this is a big deal. I can't remember the name, but I'll put it in the show notes on Smaulgld.com. I actually did it when I first caught wind of what they were doing. And I was projecting that this is what would happen. That companies would become, and I'm saying this is a good thing. I'm not saying that, but it is a way of creating a super dominant corporate entity. They also have social media. So this company has a social media platform, an e-commerce platform, crypto trading, and a bank. Now think about that. They know every last thing that you do, and they can extract every last yen out of you. They get your yen, they allow you to buy cryptocurrency, because that's what's going to happen. If you're in their bank and you're on there, you can now register. This all starts in June. So you got your yen, and you are a Rakuten Japanese guy, gal or whatever, and you bank there and you use their e-commerce platform. Wonderful. You don't know anything about cryptocurrencies, you don't trade cryptocurrencies, but maybe you use their social media platform. Then they tell you, look, you can buy cryptocurrencies through our platform. It's very easy. And then you can go spend them over on e-commerce. You can send them to your buddies on social media. You could see what's going to happen. The yen they can't track, but once they have everything in the ecosystem, and they're selling you Bitcoin and Litecoin and Ethereum, and you're trading on one platform, taking the profits and spending it on the e-commerce platform, converting your crypto winnings into the bank account, or losing money and then having to take money out of the bank account. I mean, you can see how they control your entire day, because if you're on social media, you have a bank account, you can shop there, you can trade there. You can see how millions of Japanese can be just tied into this one mega company, Rakuten, buying, trading, spending time on social media. and doing their banking. So I think this is a very, very big deal. There's nothing like this. As I mentioned, Amazon doesn't have a bank. Facebook doesn't have a bank. They're thinking about having a coin. Facebook doesn't really have e-commerce in the same way. Here's a company that actually has e-commerce, social media, crypto trading platform, and a bank. Now, Coinbase has a crypto trading platform, but they don't have e-commerce. They don't have social media. Now, one day they might have a bank. That would be something they probably move towards first. This is, I think, a very big development. I don't know if we might see mergers in the United States along this line. Something like a Coinbase merging with Amazon. Something like a Facebook merging with Rakuten, a trading platform. Or something like Amazon merging with Facebook. And then adding the trading platform or Facebook coin. So I do see this is a potential, and this was something I noticed about, as I mentioned, 6 months to a year ago. I wish I had the name of the YouTube that we covered this on, but keep that in mind. I think it's a very big development going on. All right, let's get into this Bitcoin SV. As I mentioned, Bitcoin SV was a fork off of the original Bitcoin fork that caused Bitcoin Cash with Roger Ver. The guy's name is Craig Wright. And Craig Wright has been claiming that he is Satoshi. Now, if anyone who follows Bitcoin knows, they always say Bitcoin was created by an anonymous person. His name is Satoshi Nakamoto, and no one knows who he is. And there's all kinds of theories on who he is, including could be a group of developers. No one knows for sure. But Craig Wright says, you don't have to worry, mate. It's me. I'm Craig Wright. So a lot of people have jeered him, said, no, you're not. And I don't know today whether he's given the information that he is or not. But a lot of people have said that he is not Satoshi, and he gets very annoyed. And he says, you better stop or I'll sue you. And he actually started suing people, sending letters out that he's suing people. And this gentleman here, he is the CEO of Binance. As I mentioned, the world's largest crypto trading platform. And because of all this drama that's going on with Craig Wright sending out these letters that, you know, see you in court, you better stop saying I'm fake Satoshi, you better recognize that I am Satoshi. And a lot of, you know, and it costs money if you have to defend you, even if it's a nonsense suit. So here he says Craig Wright is not Satoshi. Any more of this, and we delist. Now, what he means by delist is take Bitcoin SV off of his trading platform so you cannot trade on Binance in any way, shape, or form. Now, Bitcoin SV is not insignificant. Currently, it used to have over almost a $2 billion market cap. After the last few days, it's down to about 981 million, and has decent trading volume as well. Let's see what the recent volume has been. I mean, it was trading. Yeah, a lot of people are getting out of it because Binance decided they weren't going to support the coin anymore. Well, that was his threat, and then he followed through with it. So there he is. There's his name, Changpeng Zhao. He says, stop this, and it doesn't stop, and he delisted Bitcoin SV, and he outright called Craig Wright a fraud, which is going to get him sued too. And he's already said, I don't care, I have millions of dollars, we're ready for this kind of stuff. So he goes ahead and delists the world's largest crypto exchange. He delists the coin. And there it is again. Bitcoin Holy Roar getting real. Then Shapeshift, which is another more of a peer-to-peer exchange. Eric Voorhees, who started that, he says he stands with Binance, and we've decided to delist Bitcoin SV. BVS is its symbol, within 48 hours. And then the hits keep coming. More exchanges start contemplating it. Update, Shapeshift has joined Binance in saying it will delist BSV, and Kraken FX has indicated it's also considering such a move? Well, then blockchain decides they're also an exchange. Read more about our decision to discontinue support for BSV by May 15th in our latest blog post. So they're gone. Doesn't end there. Then I guess I never heard of this one. This is a smaller one. Bittylicious is delisting Bitcoin SV, and you can have it at Bitcoin SV until April 22nd. And then after that, low volumes aside, we're doing this to show solidarity against the toxic, litigious environment in the BSV space. So he's not happy anymore. And this guy, Peter McCormick, is one of the guys who's being sued. That's why he was CC'd there. Another company, lightbit.eu. A lot of exchanges started doing this, taking polls of their customers. We appreciate the opinion of our Lightbit customers and the crypto community at large. If you want to ask your opinion about Bitcoin SV, should we follow the example of other major exchanges and delist Bitcoin SV? What do you think? And the survey says, yep, go ahead and delist Bitcoin SV. That's Lightbit. And they'll probably go ahead. Now, what about Kraken? Kraken's a very big U.S. Exchange. This is the guy who's a co-founder, Jesse Powell. He's responding to people that are telling him maybe you shouldn't delist. There's a conflict of interest, and he says, sorry, I don't see the conflict of interest in delisting a coin run by guys who are suing exchanges. So he's saying also, not just is he suing individuals, this Craig Wright guy is suing exchanges, and he could be sued too, so he doesn't see the conflict. And so Kraken then decides they need to take a poll on this too. They ask the question, should Kraken delist Bitcoin SV? And the survey says yes. Now, if they didn't have don't care, it would have been a lot higher, but you can see that the sentiment is take it off. Now remember, there's people who own and trade Bitcoin SV. And so that's a very high percentage that want it off the exchange just because they're not happy with what's going on. And finally, Kraken. Everyone's wondering what's going to happen with Kraken, and there is this Binance CEO. He says, oh, I know the CEO of Kraken, and he'll do it. I have a feeling he'll do it. And just before we came on, about 40 minutes ago, Kraken decided, see ya, Bitcoin SV. The people have spoken. Kraken is delisting Bitcoin SV. They went as far as to release a press release. Little virtue signaling here. Cryptocurrency is about creating a better world. At Kraken, we take this mission seriously. Our focus is on delivering the freedom digital currencies offer. Freedom from centralized systems, financial freedom, and critically, freedom from oppression. Our vision of the future doesn't work unless it works for everyone. Over the last few months, the team behind Bitcoin SV have engaged in behavior completely antithetical to everything we at Kraken and the wider crypto community stands for. It started with fraudulent claims, escalating to threats and legal action, with the BVS team suing a number of people speaking out against them. The threats made last week to individual members of the community were the last straw. This aggression will not stand. So, that is why they have decided to delist Bitcoin SV. Never seen anything like this. This would be like if all the stock exchanges in the country or in the world decided to delist Tesla because they don't like how Elon Musk was acting. But this is cryptocurrencies. Now here's a list. This is one of the guy that was sued by Craig Wright. His list includes Binance, Shapeshift, which we covered, Blockchain, which we covered. I didn't cover Sato Wallet, Phantasma Chain. We did cover Bittylicious, and he says more coming, and yes, indeed, we just got news that Kraken has cracked the whip and sent them packing. As we mentioned, the price really taking a beating, but the Binance CEO says, don't blame me. Got nothing to do with me. Single exchange delisting won't impact long-term price. There are hundreds of thousands of exchanges in the world. I don't know if there's hundreds of thousands. His is the biggest, and clearly it did have an impact on the price. And I think I had a quick conversation with someone on Twitter. He was a Bitcoin SV supporter saying, we've got developers and we have the right technology. And I said, that could be, but you got a public perception problem here with the guy running around saying he's Satoshi and suing people. I think, sometimes you do need a positive public perception. There is an element of marking here. It's not just all about whether you've got the superior solution. If no one wants to do business with you, it's not going to matter that much. And I think that's what's happened here with Bitcoin SV. Now, as to investment, I think this is also something I like to pay a lot of attention to, the investment and how those investments in crypto are doing. As I mentioned, Binance said that only 7% of money in crypto comes from institutional investors. From institutional investors, which means 93%, if I'm doing the math right, comes from retail. And remember, institutional investors have a lot more money than retail investors. Binance also in the news in that they made $71 million in profit in the first quarter of 2019. That's pretty good. I mean, that's a lot of profit. That's not like .com money, where they make no money. They're just telling you how much revenue they have, or like Tesla and how many orders they have. That's pure profit after their expenses. This processing business, is good money. Exchanges are good money. You just need the volume. Doesn't really matter where the price of the underlying assets you're trading or converting are. Yeah, they had a 66% profit increase in Q1. I guess he figured you're not going to lose much by losing Bitcoin SV. Also a story about endowments. Now this is what you would call institutional money. 94% of surveyed endowment funds are allocating to crypto investments throughout 2018. They're probably doing less than the 1% rule. I would imagine the way they manage these funds, they put out little flyer investments, and at some point they'll allocate a greater percentage or a greater percentage of a percentage if they get to 1%. But again, it makes sense. You see, people think, well, I would never invest in something as stupid or risky as that. No, you wouldn't put all your money into it. You wouldn't put half your money, 75% of your money, 25% of your money. But anything that has the potential, bubble or not. A lot of people, I don't invest in bubbles. The other thing a lot of people do is they won't invest in something because they insist it's unsustainable or it's a bubble. Psychologically, I have a problem with that, because that's like saying, I won't date this person because one day they're going to get old and die. I mean, you live in a period of whatever, 70, 80, 90 years, whatever your lifespan is. Yeah, things are going to come and go. And there are things that you can hop on in investments and ride them for a while. I mean, and some of them last for a long time. This idea that you can only invest in something that's sustainable, like gold. I mean, if you look at all the fortunes that were made in history, they were all things that happened for a period of time where that's where the fortunes were made. The railroads, the .com, the real estate, whatever it is. Yes, and there are bubbles and they go bust, but the idea that you can invest during periods of time, and some of these, the advent of the automobile, maybe the Studebaker's not around anymore, but cars are still around. Pets.com isn't around anymore from the .com, but Amazon is. So it's not just refusing to, invest or get involved in something when you know it's unsustainable. It's like, the better question is, how long is it sustainable? Not it's unsustainable. Because that's almost moronic, because everything is unsustainable, other than maybe gold, okay? But gold doesn't make you money. A gold person will tell you it's not supposed to make you money. It's insurance. It's insurance, I would say, my view is, while you are chasing unsustainable things. Because that's the nature of life. It's unsustainable. But people get very, they think they're being smart by saying, this is unsustainable, that's unsustainable, everything's unsustainable. All right. That's it for the A little rage there. Now here's one I don't know if this makes sense. This is a little too risky for me, but France passes bill to allow insurance providers to invest in cryptos and tokens. But maybe, I don't know the details of this bill, but if they're limited to 1%, well then that's fine. Why? Because if an insurance company can boost its asset value by investing in a 1% of something that's speculative and make 10 times or 100 times their money, they can boost their overall portfolio, which gives them greater reserves to pay out on claims. So it does make sense for them to, I don't know what the limit is, but if it's under 1%, that makes sense. Why not have a flyer out there? All right. What else do we have in? A few more here. Stablecoins. Now, stablecoins are all the rage in 2018. Goldman Sachs got involved with one with Circle. Coinbase issued one. Gemini issued one. And the idea with a stablecoin, if you do it based on US dollars, and there's the whole Tether controversy, the ones in the United States are regulated. You get a BIT license, you get FDIC insured accounts, you have audited accounts, and therefore your stablecoin represents a dollar. And there's supposedly a dollar backed by it. And they say, why would you want to have that? Solely for convenience of trading. You trade out of your crypto position instead of converting into fiat and getting into the bank account. You leave it on the exchange as a stable coin worth $1 that you can then, at some point, if you want to, convert it into fiat, or you can just trade it back for another particular cryptocurrency. You might be trading on the Gemini or Coinbase or whatever platform you're on. JP Morgan's going to have a stable coin. This one, theirs is going to be backed by the dollars that they have in their JP Morgan account. Now, is that as good as having $1 in a bank? Probably not. It's JP Morgan's bank. It's probably not FDIC. But the idea is you trade in stocks and bonds in your JP Morgan account. You get your couple of $1,000 gain or whatever it is, just your sale. You put it into the JPM coin. These coins aren't meant as investment vehicles or to trade them. They're just meant to smooth the flow of commerce generally within a company's ecosystem. Because dollars work just as well outside of JP Morgan, and so do dollars work well outside of the stablecoin environment of Coinbase or Gemini. But it's interesting, this one wants to get a stablecoin based on U.S. Treasury bonds. So I guess that would mean they would fluctuate a bit more because Treasury bonds, you know, they trade not at $1. What else? Canadian property taxes to be paid or allowed to be paid in a town in Canada. Interview with the Canadian mayor. Bitcoin, so much cheaper than credit cards for transactions. That's the point. Canada, or this town, Innisfil, isn't going to lose anything when they accept cryptocurrencies. I forgot the name of the processors that they're using, but they're not going to lose the credit card fee if they were to accept their taxes through credit card. Now, France is in the news. During this burning of the Notre Dame, they're having a crypto week in France, and France pushes to become the global hub for blockchain. They're having Paris Blockchain Week, began today, and it's a push, the government-backed push, to establish France as the kind of global hub. And they're also trying to encourage the rest of the EU to adopt the French regulatory environment that they've put on cryptocurrencies. So here you see the Minister of Economy et Finance delivers pitch to make France the center of European crypto development at Paris Blockchain Conference during Paris Blockchain Week. And there it is, les France et tous les mondes. All right, I'm not going to read French. What else do we have? More French crypto. Yeah. Reuters says France to push EU member states to adopt its crypto regulations. Malta probably has a head start on France. That's called Crypto Island. Ledger company, Ledger X. Now, many of you may not remember Ledger X, but in 2017, I believe it was in the summer of 2017, they launched Bitcoin futures, the first Bitcoin futures. This is before the CME group got theirs off the ground in December. And now Ledger X is making a bid to launch physically settled Bitcoin futures for retail investors. This would be a unique product. It's one that Bakkt wants to also get approved, Bitcoin futures that are not cash settled, but actually physically settled. And it's possible that Ledger X may get off the ground before Bakkt. And the reason for that is I think Bakkt has a lot of other things going on with the custody and with the converting into fiat and Starbucks. I think that platform is much more ambitious than just a simple futures product. So Ledger X may get their Bitcoin physically settled futures exchange off the ground before Bakkt. We'll have to follow that and see what happens. All right, in 2020 news, a couple of things happened. Bill Weld, Republican, he's going to be a challenger to Donald Trump in 2020. He used to be the governor of Massachusetts about 20 years ago. He also ran for president on the Libertarian ticket with Gary Johnson in 2016 as the vice president. I think Donald Trump has a 90 or 93% approval rating in the Republican Party. I think this is tilting windmills here. But of course, many media outlets are saying he's a credible challenge. Huffington Post called him a credible challenge, and with wishful hope in their writing, saying whenever a sitting president gets a credible challenge, he always loses. Yeah, for example, Jerry Ford got challenged by Reagan right up to the convention, and then he lost to Carter. Carter in 1980 got challenged very seriously from Ted Kennedy in 1980. Didn't have enough to win the nomination. Wasn't that close, but at the convention, Ted Kennedy gave probably the only good speech of his life, and people thought, wow, we should have nominated him. And then Carter lost. And you see it a lot. If the party is not unified going in, it doesn't even matter sitting president or non-sitting president. If you have, well, Bernie Sanders really hurt Hillary Clinton. She should have just walked in and got the nomination. That's how they planned on it. The fact that Bernie Sanders challenged her right to the end probably hurt Hillary Clinton. And you see this a lot. You see it in, I don't think anyone could have beat Reagan in 84, but Mondale got a serious challenge from Gary Hart that year. So you see this a lot. The only thing is, I don't think that Bill Weld has any credible chance of harming Trump. Even if Trump stumbles, they would look for somebody else. It's not going to be Bill Weld. And right now, if I were to think of three credible Republican challengers, I'm not suggesting they're going to run, they would be Paul Ryan, on the basis that he was a vice presidential candidate. He was the Speaker of the House, so he's got some national stature. Mittens Romney, he did run for president and got the nomination in 2012, and he is a senator. And Flimsy Graham, just because he's high profile nowadays. Those might, if any of those three ran, you might be able to make the argument, well, you're weakening Trump as a result. But Bill Weld running as VP of the Libertarian Party in the last cycle, that doesn't make him a credible Republican. And then during that, he was praising Hillary Clinton, saying she was a good friend, good gal, high integrity. That doesn't go well over with Republicans either. So I don't know if he has any shot whatsoever. Now, speaking of shots, I think the Democrats have like 20 some odd people that are now officially running or planning on running. And one of them is this Mayor Pete. Now, Mayor Pete he's a mayor. He's barely eligible under the rules of how old you have to be under the Constitution. Young guy, 37 years old. But he's made his, I don't know if it's a centerpiece, on the fact that he's talking about America's not much of a democracy because of the Electoral College. I don't know. That the Electoral College is an issue. It's a debate to be had. But it's not one for the president to put forward, presidential candidate, in my opinion, to be putting forward. And also he's getting his terms wrong because the United States wasn't set up to be a democracy. It was set up to be a democratic republic. And I had responded on Twitter. Someone was complaining about, I think it was on don't remember what thread it was on, but a lot of traction with these posts I made because they were trying to say that the Electoral College was set up to promote the South, and it's not really what happened. Was the small states wanted that because the small states wanted to have representation, and they included northern small states and the lightly populated southern states. So people were conflating the 3/5 rule with the Electoral College. Now, it is true that the southern states tried to boost their population numbers to get more electoral votes, but the Electoral College wasn't set up to give the South a greater say. In fact, they would have gotten a lesser say if they didn't get the 3/5 compromise, which for those who don't know what it is the South wanted to include their slave population in their census to get more electoral votes. And the North said, well, you don't let them vote, you don't let your slaves vote, so why should they count towards your vote total? And they were like, well, we're not going to join then. And they wanted to have more representation. They said, well, we're not going to base it on the number of slaves you have. And then one northerner said something like, do you suppose we also add your cattle and your sheep in your census number? Really driving home the point that you are not treating your slaves as people. You're treating them as chattel, something that you own. So don't give us this, you want to include them, because next you'll be asking to include your cattle and sheep. And the South was adamant, and the North caved, and they said, okay, well, you can count 3/5. Each slave counts as 3/5 of a vote. But that's conflating the issue. The Electoral College wasn't designed to give the South anything. In fact, it was designed to give all the small states something. It was that the South managed to get more out of it by boosting their population numbers with this 3/5 compromise. But it's amazing how people, they think that popular vote is a good thing in a national election. It's not. It's a good thing in a local election. It makes sense. That's a good thing. So if I got the most votes in a local election, I should win. But in a national election, you theoretically can have 3 mega cities determine the outcome of it just based on popular vote. And it's the same rationale why every state gets 2 senators, no matter its population. Some people think that's ridiculous, but Wyoming would have no say if it didn't have 2 senators, if it was just based on population. Then California, New York, Florida, and Texas would run everything on a national level. So if you want countries, if you want states to join, and you want them to stay in the union, especially since so much national policy influences what happens in the states, they have to have a say. And that's why they have the Electoral College. But Pete is out there talking about almost like we need this pure democracy concept, which, that can amount to a tyranny of the majority. And the extreme example I give is 51% of the population can vote to take away the property of the 49%. Now, there are constitutional safeguards that might prevent that from happening, but that's the idea. That's why the United States Constitution is set up not to be a pure majority. It's because they want to make sure that there are safeguards in the voting so you don't get the whole checks and balances thing, states' rights and so on. Is to make sure that you don't get a tyranny of the majority. All right. So I'm not sure how well he's going to do. I mean, I wouldn't make that the centerpiece of what I'm running on. And I'm not saying it is, but it's one of the first things he says when he's running. So, all right. What else? Now, let's turn it over before we get off the line here. What's going on with the Fed and the stock market. And we're just still heading higher. Donald Trump. If the Fed had done its job properly, this is what he says, which it has not. He says the stock market would have been up to up 5,000 to 10,000 additional points, and GDP would have been well over 4% instead of 3% with almost no inflation. Quantitative tightening was a killer. Should have done the exact opposite. This is the second time he's argued that the Fed should be doing quantitative easing and lower rates. Now, when he was running, he was saying the Fed shouldn't do QE, or before he was running, he said they shouldn't do QE. Then he was saying this was all creating a bubble. But he's actually putting his mark now. Remember, the Fed has a dual mandate, which is stable dollar and full employment. Price stability and full employment. Now you're adding, I mean, he's basically saying the Fed should be, not that the Fed hasn't really paid attention to these things, stock market gains and GDP growth. That's what the Fed should be concerned about, according to Trump. And we're seeing the Fed caving to this. This is Fed Evans, Chicago, very influential member here, head of the Chicago Fed, second most probably in influence to the New York Fed, which is the most important. He's saying low inflation rates may freeze interest rates through most of 2020. So now he's saying maybe we raise rates once. That's not different than what the full committee said in the last minutes. They might raise rates once in 2020. But remember, 6 months ago, they were saying 2 more in 2019 and probably 3 in 2020. Now they're saying none this year and maybe 1 next year. I'm saying I think you'll see pressure and get a rate cut this fall. And the reason for it is they want, Trump wants there to be, when you move into the spring and summer of 2020, during the presidential election year, you'll want to see a better economy. And you can get that by lowering interest rates. And we saw this, if you read The Secret Diary of Arthur Burns, who was the Fed chair from 1969 to 1974 under Richard Nixon. He was brought in to help him win. And Burns didn't know this, but Nixon brought him in so he can keep interest rates low so he can get reelected in 1972. So there's nothing new here. But I would imagine the pressure will be intense to lower interest rates. And you see Kudlow out there saying he wants to do that. Now, there is, remember, we've got Herman Cain and nomination of Cain and Moore en route, and they would pretty much change somewhat of the complexion of the current more, it's funny to call the current Fed members hawkish, but they're more hawkish than Cain and Moore would be because they would be sent in specifically to argue for lower interest rates. And, of course, White House Kudlow supports Fed's pal and Cain nominations, so he's for both of them. Lakota, I can't remember how to pronounce his name. He used to be on the Fed board. He was from Minnesota, I believe. He was one of the Fed board members. And he is now a columnist. Oh, it's the same picture. That's why I'm having trouble. Yeah, he's not having trouble. He's now a columnist for Bloomberg. And he's saying it's not too early to start fighting the next recession. This guy, I think, liked I think he liked negative interest rates when he was on the board. He used to be Fed president of Minnesota. But he's talking about not too early to start fighting the next recession. Got to get aggressive, which means rate cuts. You're seeing this big change here. And 2 more stories before we get over to your comments. This guy, BlackRock, which is the largest fund, Fink, says stock market at risk of a melt-up, not a meltdown. He warns Larry Fink. So he's thinking there may be a surge to the upside. I guess he's talking his book there. But again, they start lowering interest rates and they get this mythical Chinese deal done. But before all that, I'm going to throw a little cold water on this. This was a very interesting chart here from Holger Jaspitz. Okay, Schuldenschuchner. Okay. Buybacks, this is amazing statistics, have been the largest single source of U.S. equity demand each year since 2010. Look at those numbers, $421 billion annually. Goldman says suggesting banning buybacks would have a disastrous consequence on Wall Street. I think Bernie and Elizabeth Warren are in favor of banning buybacks. I mean, they are. If you talk about who's pouring money into the stock market, you talk about central banks, you talk about institutional investors, it's the companies themselves. And they're able to do that. If you have low end, they can even borrow money and buy stocks. The best thing you can do, borrow money at low or zero interest rates, buy your stock back, the stock price goes up, you get a 12% gain that year in the stock, you paid nothing for it, you paid down the debt. Look at that. Amazing, amazing, amazing. That's the real worry. Not that central banks are buying or they'll stop buying or institutional investors. Households will look, households, they don't always add money. Sometimes they take money out. Mutual funds, look, they take money out too. It's the corporations. They just keep pouring it in. They've got every incentive to buy back their own shares. All right, I know this has been a long one. I haven't been online in a couple of days, so I need to, sorry, we had a lot to cover, but let's get into, oh, by the way, the live, I want to thank the 15 people who have now signed up for DLive. When I get active over on that platform, you need 200 to really be able to upload over there. You can occasionally stream, but if you don't have 200, but then they take your stream down after 7 days. I don't want to get started over there until we have 20. So if you're interested in supporting an alternative outlet for this channel, please sign up over at DLive and just DLive/Smaulgld, and you can sign up. And I will try to get started over there. All right. Excuse me. I'm talking a long time tonight. Let's see what we have. All right. All right, let's see what we have here tonight. We've got Andrew and Ann. Noah Gosselin. That looks like a new name. Ann's talking about fake Satoshi is what they call Craig Wright. He was then delisted on Binance. You know what I'm going to have to do? I'm going to have to get Bernie Sanders back on, since he looks like he's making some progress.
With the 1% in this country, if you write a book, you can be a millionaire too, and maybe even a billionaire.
Okay. Yes, let's see, what else do we have? Tossing Molotovs. What really drives the AU-AG ratio down is the perception that AG is not an important asset. Yes, and the reason it's not an important asset is it's not considered a monetary asset. I don't care what the silver pumpers say, it's not. The investment profile for silver is it's like 10%. The amount of silver that's made every year and the amount of silver that's purchased for investment is only 10%. It's an industrial commodity, it's a jewelry metal. That being the case, it doesn't have tier 1 status. Banks don't hold, oh, but I saw Russia. Yeah, Russia could hold silver. Any country can hold silver. They don't put it on their balance sheet as a financial asset. That is the point. That's why silver does not have a ratio to gold at 16-1, 15-1, 9-1, or some ridiculous 1-to-1 ratio they keep trying to say. All right. Let's see. CoinsAZ says, hello, fine people. Noah Gosselin, not a big fan of Roger Ver. However, he did. That's true. He was called Bitcoin Jesus. He said he did a lot for the Bitcoin community back in the day. Yep. Well, let's see. What else do we have? Remember the rule, if you want me to comment, you got to put Smaulgld in your comment. I'm going to scroll down. I know you guys have some great discussions amongst yourself while you're not listening to me, but that's good.
That's a good thing. That's a good thing. Maybe you can write a book while you're listening to Smaulgld. Who is this guy?
I'm just scrolling through your comments looking for a Smaulgld. We've been on an hour and 12 minutes. It's okay.
That's a good thing.
Let's see. What else do we have? Good history lesson. I don't know what you guys are talking about. Lewis is correct here, guys. Well, it's always nice to be correct. But I don't know what we were talking about here. Emily York. Thanks for the real news, Smaulgld. Well, thank you, Emily. All right. Must be German. And it looks like, yeah, the CoinsAZ, Andrew, Electoral College is definitely abetting that problem. It's not in line with the Founding Fathers' reasoning for instituting the EC. Don't know what that means. All right. Well,
I'm going to go write my second book because I need to become a billionaire. So we'll see you tomorrow. Have a good night.